Welcome everybody to MarketStream.live. We are back. It is July 25th, Tuesday, and we are getting into the tail end of the trading week, last trading week of July. And folks, we got all-time highs in the S&P 500. We have mixed action in Asia, and we have the EU rallying to the upside. We have a lot going on. I'm going to wrap everything up so far this morning and from the overnight session, and you're going to get it all here in the next 5 to 10 minutes. All right, let's take a look at Japan and Asia. Nikkei is down 20 points overnight. What's notable? Take a look at the action right now between the 20 and 50-day moving average. For those of you who don't know who I am, I'm Joe Cusick with the Cusick Group Securities offered by MoneyBlock. And I utilize the 20 and 50-day moving average. Gives me an idea of who's in control. Stocks trading or indexes trading above the 20 and 50-day tells me the bulls are in charge. In between, there's a battle. The bulls and the bears are battling. Below means that the bears have gained some traction. We haven't seen bearish traction in a long time, but we've seen quite a few battles. You might ask, well, what's this blue line? This is actually the inverse of the VIX, the Volatility Index or the Fear Index. When markets are going up, this is going up. When markets are going down, this typically will turn tail because that means volatility is going up. Well, we're not seeing that. We're actually seeing that these two markets, which are normally correlated, are now not. And so that is a bit of pause. Now, the Nikkei has had some pressure due to the fact that we've seen some strength in the Japanese yen, but that's pulled off. They're going to continue with their policy because they believe the Bank of Japan did come out with their minutes after their last meeting, basically said they're still concerned that if they get too aggressive with their policy, in other words, pulling off some of the monetary easing, that could put a tailspin into the economy. We'll have to wait and see. Taking a look at China, the People's Bank of China infused 140 billion yuan overnight. Now, the Chinese government is going to be watching the housing markets, and they're going to watch local government spending. This has been something that they've been clamping down since the end of 2016, and they've continued through 2017. That has really helped the Shanghai Composite rebound, and you can see the SVXY, that's the index that is the inverse of volatility. So it's the exact opposite. If this is going up, that means that there's not a heightened expectation of potential big violent moves, specifically in the S&P 500. And you can see these are very correlated. Well, now you have the Shanghai Composite down today, but well above the 20 and 50-day moving average. This has been one of the best moving indices in the Asian Pacific region. Now, taking a look at the Hong Kong Hang Seng, up overnight and still moving to the upside. As long as housing and property markets, gaming markets continue to stay stable, that's going to be a positive for Hong Kong. Taking a look at India, India continues to move to the upside. A little bit of a blip last week, but bottom line is that the consulting businesses are doing very well. You continue to see that there's growth in the economy, but a little bit of a pullback. We'll watch this one very closely. Not seeing a lot of volatility, though, even though it's coming off a little bit, not seeing a ton of volatility. Let's switch gears here. And what I want to focus on right here in Europe is take a look at the Treasury markets. The 10-year in France, Britain, as well as Germany, all coming off in price, down basically anywhere between 0.2% and 0.7%, with Germany being the most notable. What does that mean? That means that they're selling bonds, so the prices are going down, yields are going up. That means that you're seeing the likes of the DAX, the German index. Bottom line is in Germany right now, you're seeing a report came out, the IFO Business Climate Index, highest since reunification. We're talking the 80s, folks. So there is quite a bit of recovery that is potentially going on this morning. Large cap names like Siemens, BASF, and so forth are up. Financials are up, so Commerce Bank and like are up. You are seeing, though, weakness in the autos. Most notable is Volkswagen, BMW. Exporters, if in fact the euro starts to strengthen against the dollar right now, that could put some pressure on exporters. But all in all, you're seeing that the German markets are firming up after what has been a 2 to 4 session downside move. Taking a look at let's take a look at the French markets in the CAC. The CAC right now trading up 41. You're seeing consumer names, L'Oreal, Louis Vuitton, moving to the upside. With the stability in Asia, which is one of the largest consumers of a lot of these products and high-end products, especially China, you're starting to see that they're rebounding in France, challenging that 20 and 50-day moving average. The bulls have been on their heels, and the bears were gaining some control, but we're starting to see that they're running to the upside. Again, watch the euro. Strength in the euro is going to put some pressure on the consumer markets. It's going to put some pressure on the exporting market specifically. Right now, they're rebounding after being beat up, but we'll watch that very closely with the euro continuing to move to the upside, but backing off from its best levels. Taking a look at the UK, England up to the upside, oil. Oil spiking 1% after the Saudis came out and said that they are going to limit exports to 6.6 billion barrels. And Nigeria came in, which is not an official OPEC nation, but said that they will limit their production to 1.8 million barrels per day. We'll wait and see. As I've always said, I will watch this with a grain of salt, but that has also got miners to the upside, and you're starting to see financials, which are benefiting from the spike down in the Treasury markets. Taking a look at the Treasury markets here in the U.S., that's been a big driver this morning. Treasuries right now on the 30-year, the 10-year, and the 2-year are getting pounded right now on the price side. That means that prices are coming down. For example, you look at the 10-year. This is the benchmark that I watch. It's down over 0.5% this morning. And as a matter of fact, if you look at yields, currently right now the 10-year yield is at 2.32%. So it's spiking up from its lows of around 2.2% that we saw late last week. This is going to be a huge benefit for financials. And we'll watch also the housing data that's going to be coming out today and the remainder of this week, as well as the Fed is meeting. Believe it or not, very low expectation of moving any interest rates, but the Fed has a 2-day meeting starting today. We'll watch that closely, but bonds are getting really whacked today. On the price side, that means yields are going up. That means financials could be benefiting. Take a look at copper. Copper is flying to the upside. You remember I was saying that 275 level? That's a level you want to watch. It's been stiff resistance. Well, copper has blown through that, trading at 282. This is extremely bullish for copper, starting to trade at levels that we haven't seen in a long time. As a matter of fact, it's probably been since late February to early March that we've seen a challenge of these areas, and it is really moving to the upside. That is extremely positive for infrastructure and material segments. Gold down $5, still above the 20 and 50-day moving average. So gold bears have gained a little control this morning, but the bulls have still held their ground, dug their heels in. As I had noted, crude oil trading in that $47 level, above the 20 and 50-day moving average on the CL contract. That's the West Texas contract. We're going to watch the inventory numbers very closely tomorrow, both for crude and gasoline. We want to see a continuation of a draw with the news out of OPEC. That has been a catalyst, but folks, I'm telling you, there is such a glut of inventory that if there is not either large draws in conjunction with pretty substantial production cuts, crude is going to have a tough time getting any momentum above the $50 level where it was trading back in late May, early June. So we'll have to watch that. Taking a look at the equity markets, I'm going to start with the small caps, and you can see that the small caps are hitting highs again. The IWM, which is the Russell 2000 ETF, and the Russell 2000 index are both trading at highs. You see that they're trading right now at up about 11. Small caps are just screaming to the upside. They're voting on healthcare sometime this week. It looks like Senator McCain, after being diagnosed with brain cancer, is going to go to Washington. He is going to vote, and there's a heightened expectation that they are going to repeal Obamacare. We're going to watch that highly contested and volatile debate. We'll see how that plays out, but the Republicans just don't have any room for movement on that vote. Taking a look at the Nasdaq is up 6.25. Despite, you see the futures are up, but if you look at the NDX down 14, that's the Nasdaq 100. Google came out, beat on both top line and bottom line results. But the bottom line is that the big company is not getting the same ad revenue that the street was anticipating, plus the large fine that they got from the EU. This is perplexing. If we ever saw this type of movement in the past in Google down $30, as a matter of fact, if you take a look at Google L, which is GOOGL, you can see that Alphabet is trading now down $30.67. That would have been a huge catalyst to the downside. Market's not even blipping. The Nasdaq futures are actually up. You see the Qs are down about 0.3%, and the Nasdaq's only down 0.2%. One of the more notable things is you're seeing large cap tech names like Apple trading up today $1.35, challenging that 154, 155 level, potentially up in this area. Those are going to be critical resistance levels that we haven't seen challenged in about a month. You're also seeing the likes of Facebook. These are names, the FANGs, that have carried the markets. Now, Facebook is down $1.59. We have to watch this very closely, folks. Weakness in these stocks is going to indicate that either there's a cyclical shift, which we can see is small caps moving to the upside, blue chips moving to the upside. Specifically, if you're looking at the Dow, the industrials are up 106. Large cap names with some decent dividends. Maybe they're cycling out of these high-flying tech names and actually going in and rolling into these higher dividend-paying, higher-yielding stocks as the market continues to roll to the upside. Let's watch this very closely going into the end of the day. And finally, volatility. Folks, I don't know how to explain this. We're in earnings cycles. We're at all-time highs. We're also hearing that money is cycling back into the markets at record levels at all-time highs. And we're historically at some of the lowest levels we've ever seen in the fear index. I can't explain it. But what I am doing is that I'm making sure that I'm using very prudent size management in any positioning that I'm putting on in the markets today. It is just an incredibly challenging time right now, while positive for the general markets and the trend as far as to the upside and anybody positioned in that way, but it is challenging nonetheless. And the volatility index trading at levels that we historically just don't see, and they've been sustained at these levels. So we'll have to wait and see. A lot going on. Fed, healthcare, earnings. Watch biotech. One other notable thing, watch the biotech. IBB has been seeing some big moves in biotech, down 436. And I've also been watching in the tech sector semiconductors. Semiconductors are starting to move as well. Watch this very closely. All right, folks, that is it right now. What's hot in all of the markets? You're not going to get this kind of coverage anywhere and this kind of synopsis, but please join us this afternoon. I'm going to be back on talking markets. And as always, check out MarketStream.live. And if you ever have any questions about your portfolio, if you want a risk number, get a hold of me, JCUSICK@moneyblock.com. JCUSICK@moneyblock.com. I will give you a free portfolio review just for you. All right, we'll talk to you soon.